All right, everybody, welcome back. Hey, is it Friday yet? Like, are we there yet? Are we there yet? Crude looked like it was about to get a little wild, and then it slowed back down again. I mean, in the grand scheme of things, we're not really expecting much out of crude for a while, but it was, looking like it was going to reverse with the Nasdaq, and we got it in crude, but we didn't get it in the Nazi. Starting to build like a real ugly little inverse head and shoulders too. But and that's kind of a joke, right? Yeah. So we got some topics today to hit on, and then we got some trades to look at. The one that we had already put on, the XLF, it's worth talking about it a little bit. It's had time to kind of bake in the oven. There's the trade ONDS that I put on yesterday. These guys diluted their stock overnight, and so the stock took like a 22% hit. And the short call that I sold yesterday, of course, is profitable today because of the steep drop in price. So that one is one that we could evaluate. And then an Apple trade that I put on, it's I believe it's a calendar. It might be a diagonal, but either one, it's worth looking into today. And I was pricing out another trade. Haven't quite put it on yet, but I thought we could review those and kind of get a little bit of a discussion going. It's a broken wing butterfly for Baba using the September expiration after that big breakout that it had today, right? Baba has needed to get through this resistance level at 120 for a while, and it had a big gap up breakout today. And so a broken wing butterfly on that looks pretty decent. This was what I was pricing in the pre-market. I'm gonna put it in the chat for you guys. It's a broken wing with 130 as the mid and 122 and a half as the line in the sand that it needs to stay above, which would be right about the close, maybe the high of this previous day. Yeah, pretty close to the close. That would be the line in the sand we would need to stay above. And anything above this line is profitable. Below it is when we start to get into loss. When I was pricing that trade in the pre-market, it was going for about $2.50 in credit. It's not bad, you know, but I thought we could review those and have a discussion about some trade opportunities and how really with options you can trade anything anytime, as long as it's liquid enough to trade. Because we can go long, we can go short, we can go long and short, but not sideways, or we can go sideways long, sideways short, just sideways. So many choices, right? There's just so many ways that we can trade. So there was a question about dark pools in the Q&A channel. The thing about dark pools is before you could even try to use it in your trading, you got to kind of have a feel for what the hell they are in the first place, right? Like it just sounds complicated, but really it's not. There are rules in place for what information gets released when a trade takes place. And then there are off exchanges where a trade can be placed and less information is provided. Those trades get routed around the world and usually have a 24-hour cycle. So a trade placed, say, today at noon would hit the tape tomorrow at noon. There are some signature pieces to the trade that, depending on the trading platform that you use, it might have a little designation next to it. Usually that would be something that you see, say, on the CMG or the CQME, one of those other kind of brokers, not on Thinkorswim. In the time and sales on Thinkorswim, you just see the trade. But on other brokers, more detail is given, kind of like with the level two. If I open up my level two, I can see, different exchanges. These aren't trades that have happened yet. These are waiting in the queue. So they wouldn't have the designation that I'm talking about. We would see that on time and sales. And it would have some kind of letter acronym behind it. There's other tricks for identifying dark pool prints as well. Usually it has to do with price, but if a market is sideways, then that's not as easy to spot. For an example, if we seen, price hitting at 121 yesterday, we wouldn't have known if those trades happened the day before or even days and weeks before because we had been at 121 a lot. Tomorrow, if we fall all the way back down, and we're trading down here, and we see in time and sales tomorrow trades that come in at like 125, 126, 127, we would know that those are dark pool prints, but they are subtle, right? So most people that I know, if you're going to mess with dark pool, they just use some kind of app or tool. They don't try to, dig that information out on their own. We use Trading Ticks here in the Discord, so you can just backslash dark pool. And if you do that, you'll see that Trading Ticks has a dark pool symbol. I'll bring up the Discord and show you that. So here I typed in the word dark with a backslash and it shows dark pool right there. There are these others from like OpenBB and Whale Stream or Unusual Whales. So different providers offer different results. Um, the more expensive the product, usually the deeper the detail or the more detail they'll provide. So that's handy, right? If you're trying to track dark pool prints. I grabbed some stuff just from AI. I asked it a pretty simple question like explain, dark pool prints, because that's what the person was asking for. AI can become eloquent when it's trying to summarize a fairly complex topic into sound bites that are easy to understand. So I just threw it to the AI. And dark pool offers anonymity. The traders' identities and order sizes are concealed, which is nice, right? There's some history to that, but maybe for another day. So there's the big firms, Goldman, J.P. Morgan, all those guys. Back in the day, their trades were so big and so slow that traders could front run them, and they wanted a place to hide where the high frequency traders weren't predatory and attacking their trades and front running them. So somebody came out with these private servers and they said come over and trade on our private servers. There's no sharks. It'll be great. You'll be protected and you'll have all this anonymity. And in reality it was like the Shark Tank. There was nothing in there but piranhas and sharks. So those guys went into trade and they just got ripped apart. Well, they sued the firm, right? They took them to court and they sued the firm and said these guys promised that we would be isolated and safe and nobody could front run us and we just got our butt handed to us. And the judge is like, "You guys are all crooks. You've been swindling and cheating people for years. Now it finally happened to you and you want to cry about it? Nah, case dismissed." Threw the whole thing out and said, "Just suck it up and take it." And so they weren't happy. But I heard that story from, I believe it was Kaufman, but it might have been Sosnoff, one of the developers from the Thinkorswim platform way back in the day. I didn't have firsthand experience with it, but it's a funny story. So, anonymity, liquidity, execution, and regulation. The way it works is kind of interesting. They submit the order, and the system matches the order, gets ripped around the world, which it doesn't really talk about here, but it goes around the world to other trading desks, and then it comes back across 24 hours later. No pre-trade transparency. This is one of the big deals. This is why a lot of them like to use it, because the high frequency traders would see their trade coming and stand in front of it, knowing I'll get filled before you get filled. And if I can see your order coming and I know that your order is big, well, then I just get in front of you. I get in at a dollar. You come in with your big order, and size alone, you make price go up to a dollar 10, dollar 20, whatever. You're driving my entry higher without me even then worry about what price will do next. I can just get out once your order is filled because you moved price trading as big as you move. So that's one of the things they're trying to prevent in that whole scenario. It reduces the market impact slightly, some. The thing is, guys, they don't need this, right? To hide from you or to hide from me. They don't need this. There are so many algos nowadays that if they want to trade with size, we're talking millions of contracts. If they want to trade in size, they can do it right under your nose and you would never see them coming, right? Unless you're looking at total aggregate on the day, then you could see it because, if it's some keyhole low float penny stock that trades an average of, 100,000 contracts a day and then want to come in and trade 2 million, you're going to see it by the end of the day. But what you wouldn't see are these really big block prints hitting the tape all day long because they can trade really small if they want to, and you would never see it. Keep that in mind when you actually do see those big orders come in. They wanted you to see it. That's why they did it really big and put it right in your face, right? Shining a light on it and like this, we're over here, we're trading really big because they want you to see it. It's manipulation. If they want to trade it small, they can trade it small. And if they want to throw it around the world, they can do that too on the dark pool print. It's cheaper. They got, a reduced bid ask spread, so less slippage, but it is regulated. Somebody was asking me questions about, well, is it legit? And are we really keeping track of everything? Yeah, but the whole system is shady, right? But it's as legit as any of the other trading that's going on. It does have scrutiny, and that continues to improve too, especially, when you're sending it around the world. You got to worry about the trading practices of the other places that it lands along the way. The trade condition codes that I mentioned, they're usually a D or an X. But, I'm not looking at the FINRA data. We've only got time and sales on Thinkorswim. So it just depends on where you're getting your data. So that's dark pool prints. Where you can get them, I mean, Traditix has got them. Not most. There are a lot of dark pool places that you can go. I've seen Flow Trade was really popular for a while. You could just use the Discord. You can probably find some places that do it for free, give or take. But then you got to worry, are they getting everything? And I've compared different dark pool data from different sites. They don't match. So, some's getting some of it, others are getting other parts of it, and then you got to wonder, who's got the aggregate, who's got the total. And even if you can spot it and you can aggregate it, you still have to wonder how useful it is, right? We don't know in that volume what they were doing with it. Are they using it to hedge something else? Were they already in with a really big position and now they're getting out of it? Right? We can see if it was buy or sell, but not buy to open or sell to open. All we know is that the trade happened. We don't know really anything more than that. So we can get a little bias out of it, but whether it was hit at the bid and above, at the ask, we just don't know. So it has a limited value. What I like about dark pool prints is when it's repeated activity and it has size, and I can match it up with something like block trades because a lot of dark pool prints are the size of block trades. And oftentimes they'll do a mix of both. They'll have the in the public space or the lit exchanges, they'll be putting on block trades, but they'll also be putting on dark pool prints underneath. And the reason we call them dark pool prints is because of those unique qualifiers. Um, there was an options site a few years back that had spotted the size of the trade itself as a recognizable qualification for a dark pool print. Let me see if I can bring this up. It's in my notes from back in the day. Do, 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 do. Let's see. Let's see. Let's see. Dark pools. Oh, I know I got it in this channel somewhere. Ah, there we go. Signature um, quantities for dark pool orders. So the last three numbers being very specific. If you see, for an example, a SPY order with 501, 502, 503, 504, then those last three numbers, I should say the first three, depending on which side you're looking at it, that would be one of the characteristics of a dark pool trade. That it'd be 501,000 or 503, 504. Same thing with the QQQ, 411 through 413, and then IWM and DIA. I found that really interesting, and when I was trying to nerd out on all of this back in the day, it had me wondering if other markets like Apple, for an example, or Microsoft, some of the big dogs, right? The Mag 7, if they also had signature dark pool prints that, if somebody was to do some diligence, could dig up out of the data. And now with AI making things so much easier, I wouldn't be surprised if that becomes something that people focus on in the next couple of years because it's getting closer and closer. We have all of this data, right? And we're all just choking on it, drowning in it. There's so much data. And AI is going to be our filter, right? That converts all of that raw data into actionable, understandable intelligence that we can make informed decisions with. It's already happening, right? It's getting closer and closer every day. So in this is all old school stuff. I didn't think to bring it up because I had forgot that I had this much dark pool stuff in there. I wouldn't have asked AI today, but these are dark pool prints from different days, right? And this is like 2018 stuff. So if they hit today, they were actually traded the day before. The trade went through that day. We saw it today, and then the same thing happened. The next day, the next day. So where price is in relation to that dark pool print, depending on what platform you use, they'll make assumptions, right? If we have a big dark pool print at this price and the next day we're trading up here, they'll say, "Oh, that was a buy. That was a big dark pool buy." And if we had a big dark pool print come in here and we're down here, they would look at that and they'd say, "Yep, that was a big sell." Well, I mean, that's a pretty generic assumption, right? Thinking that that dark pool is why we are up or we are down, and then making an assumption that because we're down, that must have been a sell order yesterday. And so you want to be careful when it comes to your dark pool provider. Understand if they are offering any language about buy orders or sell orders or making any trade recommendations off of it, that you uh, dig into it and make sure you understand what it is that they're doing. I can absolutely pin that. There's two of them. Could you put it all into one? I got it. I got it. I'll do it. I got you, brother. What's going on, buddy? You busy man, huh? No worries. I was expecting an at, everybody to get my attention. I missed the whole thing. Was it? Do you have a lot of people show up? Well, that's good too. It kind of break up the monotony a little bit. Those streams can get heavy, where they're just like blah blah blah. Bueller, Bueller. So we were talking about dark pool prints and some signature prints, some kind of back in the day old school signature prints. The idea that maybe we got signature prints on the indexes, but maybe ETFs and just regular equities may also have dark pool signatures that, if somebody was to dig into them, might be able to find them. And then that we have trading ticks on the Discord here to give people an opportunity to search for dark pool prints. So that was one topic. Then we've got these trades to review. We put on an XLF trade like a week or two ago. I'd like to say it was last week, but honestly, I don't remember. It wasn't that long ago. And the idea behind this was I really want people to get more comfortable with calendars and diagonals because it's a really good trade to have as a tool, and it's a good way to make some trades. So I said, well, let's put it on, and if it needs adjusted or monitored or in any way fixed, then I'm in it with you too, and we'll all just do it together. The short call that we sold for 61 cents has depreciated and is now worth 11 cents. So we made $50 on that short call so far. The problem is we also bought a call at the same time for a different expiration, and we paid $78 for that. It's worth $31 right now, so it has depreciated $47. Well, if we made 50 and we lost 47, then we've got a net of $3 right now, right? That's not very much money at this point. But for one, it's a really cheap ETF, right? XLF is $52, so it's cheap, and the trade's not done yet. But that is the current trade. It's the $53 calls in August 15 and 22. So let's come over here. Um, Tasty Trades does not do a good job when it comes to the curve that we see. So I think Tasty Trades really lacks in that capacity, but it's all right. These are all hypotheticals, anyways, until the trade gets done. Did I miss something? 53, 22, and 15. 15. Yeah, no, that's right. Okay, it's trading for 20 cents on Tasty. It's trading for 22 here. It's good enough. This is the shape of that butterfly at this point. It looks almost like a butterfly. I mean, it's a calendar, but it looks like a butterfly. And because of that shape, because of how close the expiration dates are, this doesn't have your more spread out wide range, and it doesn't have a kickoff on one side. Usually you can offset the risk. So one side will be above zero, and then it'll rise and it'll fall below zero on the other side. We've got below zero on both sides, and we need to stay in the middle within the 10. If there's anything that needs to be rolled or adjusted, then one of the first things I recommend is to focus on the short leg. That would be the 53 strike for August. Now, earlier today, this was up about $8, $9, which again, it doesn't sound like much, right? But if we wanted to roll this, the goal would be let's roll that short leg. So I'll bring Tasty back over here and let's focus on the short call, the August 15, 23 strike. We want a quick roll just into the next expiration. It Let's look at two places. One would be going to 52.5. If we did this, we would no longer have a calendar. We would have a short call vertical, a call credit spread. And we would have this trade rolled at a credit of an additional 50 cents. Let's just round up, right? Remember when we opened the trade, we collected 61 cents. This is giving us 50 cents more for a grand total of $110 or $1.10 in credit. So it'd be a 50-cent wide call credit spread held at $1.10, meaning no matter what happens, you would still get to keep your 60 cents. Because if this trade lost and you lost $50, you'd still have the 60 cents that you started with. So what do we lose by kicking it down the road? Absolutely nothing, right? We don't lose anything by kicking this down the road 1 week. In fact, we remove risk because at this point, even if the trade was to completely lose, we would still get $60 in credit. We'd get to keep that. So that's pretty cool. That's one thing that we can do. But I don't like this trade yet because, well, it's a short call and it's in the money. And, a short call in the money that close to expiration can make you feel a little uncomfortable. So let's try the other side of the trade. If we roll it out a week and we go up one instead, can we still get a credit? And the answer is yeah. Right now they're offering $4 in credit. So that would give us a max profit of $67. And again, we have to be mindful of, well, what's the risk here? It's a 50-cent wide trade and I have $67 max profit if everything was to go well. So if the trade loses, I lose 50. I'm still sitting on $17 profit. That's a guaranteed $17. And then, commissions come out of it and fees and anything else. Then, maybe we get $12. But it locks in the profit and removes any risk of getting a trade that's a loser. If things go really well, then this would make $50 profit. We're bringing 17 with us, and that would be a max profit trade of $67. So all we're doing is removing the calendar aspect and bringing that option into today's or this following week's expiration and making a vertical out of it. We can make a long call vertical here or a short call vertical there. What I like to call credit spreads and debit spreads. Just that easy, right? Just changing what side of the fence you're standing on. So that's pretty cool. That's one thing that we could do as a choice, right? Now we could also land on the same expiry, the 53 strike where this call is, and we could roll that call at the same time, right? So we'd have to move it out of the way just for a moment here so that we can roll this. I think doing it this way, it's probably going to give me an error, but let's see if it'll do it. Yeah, yeah, we're getting a little bit of errors, I think. There we go. All right, so it's going to buy that one back. It's not liking it at all, but it sold it, and then it's going to buy another one out here at another expiration. And now the P&L is all out of whack. but that's something else we can do, right? It's just roll the whole thing. I should have just done it from this way. Select both and roll expirations out. And now it has a better understanding of what we're trying to do. So the August 29 went to September 5, and the August 15 went to the August 22. Nope, I said at 9. Either way, I don't like this one. I like the first one we were talking about, which is just taking that call that we have that's getting ready to expire this week. We need to manage this call, right? It's going to expire and it's too close to the money for my comfort. You wouldn't want to go into the close on Friday and then find out that this walked after hours and landed in the money. And that can happen. So we don't want that to happen. It needs to be closed or adjusted or something. We could just buy it back and close it and we'd be done with it. And that's okay. We'd make our $50, but we're down um, $45 on the other one. And I don't like that because then that means we just made $5, and that trade can still lose money. By the time it expires, it could be at zero. So then we'd be in the hole in the trade. We still have risk. So I don't want to close the short leg, but we do need to roll the short leg. So back to the roll. This is a call credit spread, $112 max profit. And if it loses, we still get to keep 60 of it. And that's our risk, right? Now, that trade next week will need to be managed because it has short legs in it. Unless we fall away, we're going to have some in the money. And we'll probably just close the whole trade combined next week, unless price falls away and it leaves it really far out of the money. And we might just leave it on and take this all the way for $112 profit. We'll have to see how next week goes. For this week, we do want to roll that call and we want to get as much money as we can. A lot of times when you trade options, if you're new to doing all of this, you're trying to get the lowest number that you can get here. But we're selling to open. So we don't want a low number. We want a high number. We want to sell it for as much as we can. So try to work the order. The mid price says it's trading at 51 cents. But if you notice, it shows 51 here and 53 here. So let's at least try to get 52, right? Just, try. We'll bake that order for a little while. And if it doesn't fill, then we'll come in and we'll make an adjustment, right? And I'm going to put mine on first. If you want to, you can wait and see how fast mine fills. If it fills instantly, then you don't want to fill at 52, right? Try to go to 53, 54, get as much money as you can. Mine did not fill instantly, but if it had, that would have been a good warning for you, right? If you're going to put on a multi-lot trade, say 20, 30 trades, or a 20, 30 lot trade, don't put all 30 of them on at once, right? Put one in fishing for price just to see how easy did it feel. And if it feels crazy fast, you know that you're off in your price, right? Increase it in our case because we're selling, or decrease it if you're buying, and then try again until you get the number that stalls like we're stalled here and it's not filling. Then you can try to work the order, right? Otherwise, you can give away a lot of money if you don't do that because you never know, right? We're just shopping around trying to find price people are willing to trade. So that deals with the XLF. Um, I put on a trade in ONDS yesterday, and I got to say, I was frustrated by Tasty Trades with this one. So I bought the shares on Tasty, and then I went to sell a call on Tasty, and it said, nope, the options are currently set to closing only. Well, thanks. But I wanted the options trade, right? It was a package deal. No, what's up? Okay, but I went right to Fidelity and opened the trade anyways. Yeah. Yep. Me too. Tasty's the only one that I've ever had tell me repeatedly in different products, sorry, that's closing only. But either way, it would have been, oh yeah. Yeah, those single single stock ETFs. Yep. Double, triple leveraged. Yeah. So it was actually, I should have took their advice because they came out with a stock offering and the stock took one heck of a face plant. It was down over 20 something percent. But either way, I closed my stock trade. I went over to Fidelity and I opened the trade up over there. So that option is actually depreciated by 25%. I could buy to close it. I'm not going to yet because I've got a video that I'm working on for that. But either way, every broker, when you go to roll an option, will show you the options trade differently. On Tasty Trade, it gave us a lot of information about that XLF. We knew what the original trade price was and the number that it was offering down at the bottom. We could clearly see it was going to add that credit to my existing trade. If you do a roll on a different broker, for an example, Thinkorswim, the number that you see in the roll, that's not going to be added or subtracted from your current trade. That is going to be your new trade, right? So if I did a roll here and it said that I had previously collected 69 cents and now I'm rolling and it says 10 cents credit, my new position will not be 69 plus 10 cents more. No, no, no. My new position will flat out be 10 cents credit. You have to be very careful about that when it comes to your broker. And the only way you can answer the question of is what I'm seeing what I'm actually going to get, or is what I'm seeing going to be applied to what I already had? The only way to figure that out is to actually put the trade on, put the roll on, and see what you get. After you do that, you will now know, okay, that number is showing me my new position, or that number is going to be applied to my existing position. At the end of the day, both brokers will give you the same outcome. It just depends on what they're showing you before you hit submit, right? It's not good, bad, right, wrong. It's just what is my broker doing when I try to roll? And that way we have a more informed decision. When I do go to roll, I never know if it's a good time to roll. People always ask me, "How do you know when it's time to roll?" You don't. But if you try to roll every day, you'll have a good feel for a better price. And the analogy that I was given is the gas station theory, right? We've talked about this before. You drive by the gas station every day, you see gas at a dollar, a dollar, a dollar. Every day you're on your way to work, gas is a dollar per gallon, dollar, dollar. One day you drive by and gas is 60 cents. Even if you don't need gas, you're going to see that and say, I think I'm going to get some gas. And you're going to pull in and get gas because hell, it's on sale. I mean, it's awesome. But if you drive by and it's a dollar and a dollar and a dollar and a dollar, and you drive by and one day it's a dollar 70, even if you you really need gas, you're going to say, screw those guys. I'm moving on to the next stop. No way I'm getting gas here. Screw them because you've got a feel for what average price is. When it comes to the roll, it's exactly the same way. Try to roll it every day. Look at the price that it's offering you today. You'll know that you like that number if you remember what it was yesterday, if you check it again tomorrow. So if I keep trying this roll, if we had been doing the roll every day and it was offering whatever it was offering, 10 cents, 10 cents, 10 cents, and then, today it says, hey, we'll give you 28 cents. Well, heck, that sounds pretty good. You've been offering me 10 all this time. Now you're offering me a lot more. And conversely, if it's the other way around, right? The only way you'll get a feel for it is to try to roll it. And then, of course, you got to remember what you had the previous day. So try to get familiar with your broker and how it rolls. What I recommend is to record the transaction. Don't go fast. Take your time so that you can see everything in the recording really well. And then go back and analyze it and figure out what was it offering me? What did I end up with? And which one of these two scenarios is my broker using? I honestly don't know what Fidelity does because I've never rolled on Fidelity. I don't use it for options. And when I do use it for options, I'm usually in and I'm out and I'm done. So I've got my first recording on it and I wasn't ready to roll. So I didn't roll it yet. When I do roll, then I'll let everybody know how Fidelity does it. It would be nice to have this little cheat sheet of how every one of the brokers do it so that when people say, "Hey, I'm on IBKR, what does it look like when these guys roll?" Then we can just look at the cheat sheet. But patience, I don't have that yet. So this order is not filling. I'm going to bump it. So we just want to replace order and I'm going to go back to the mid. The mid now is the same as natural. So I'm going to try to go to 51, which is what it was offered a little bit ago anyways. Try to fill that. Sometimes you just got to, I don't know if you guys go fishing and, for you bobber fishers, you put a bobber on, throw it out there. Sometimes you just, give it a little jerk, nudge it. Well, I'm just giving it a little nudge. So, all right, that's XLF. We'll keep circling back because it's not done yet. The ONDS, right? So I bought the shares at $4.19, I believe. I'm gonna bring up my broker and we'll see it. After that, I sold a $4 call. The idea was that uh, if I lose my shares at $4 a call, at the bare minimum, I have the credit collected from the call that I sold, and I'll still make a profit from that. So even though I bought shares at 4.19 and I lost those shares at $4, it sounds like I'm taking a $19 loss per share or 19 cents loss per share. I'm actually not because I collected credit. The credit that I collected, I'm logging in now, so we'll be able to see this, is around $1, I believe. Sure, take your time, sweetheart. And nobody's on like waiting on you, Fidelity. Pull your finger out of your ear. Take your sweet time. My goodness. All right. ONDS, $4 strike call, average price 119. Let's just round that up and say 120. I bought the shares for 420. I sold a call for 120. That would give me an average share price of $3. So if I lose the shares at 4 and I quote bottom at 3, then I made $1 per share. 100 shares. Not bad, right? So this trade, if I had been assigned, if they exercised that call and I lost my shares at $4, I would have been just fine, right? Because my average share price is $3. But that didn't happen. We dropped. And now the average share price in this stock is basically 360 and I bought it for 420. We're down 60 cents. The call that I sold is now worth $25 in profit. So I could buy it back and just keep my $25 in profit and consider selling another call somewhere else. The problem with that scenario is I need to figure out what they're doing with the rolls. So I'm not going to close this and lock in the gains. I priced some rolls, but pricing doesn't help me yet because I don't know if what I'm seeing is actually the new position or if what I'm seeing is going to be applied to my current position. So I don't know the answer to that yet. I will look again tomorrow, and very likely I will adjust this trade sometime next week. It's a December 19 expiration, and it's just a really good learning tool because it's a cheap stock, can't get hurt here. It's not going to go to zero, but yeah, we'll see how it goes. So this trade, I know people were asking about it. It's in a weird space, ONDS. It's got a lot going on. They were um they were doing pretty good off of this low from 50 cents, right? And that's pretty impressive from 50 cents all the way up to almost 450. So a 400% increase. And now they're getting whacked back a little bit on their own. They did that to themselves by offering stock. They did a dilution, and I don't blame them for it. They need the money. They need to expand. You know, no hate from me. I still like them as a company, and I expect to see more out of them going forward. But it is a cheap stock, and pennies are doing really good right now in this environment. But everybody's really happy with taking risk right now. And when that ends, one of the spaces that is going to get hit the first and the hardest are these low float penny stocks companies, right? These guys, all of these guys, not just this one, but in general, pennies are going to get hit hard and fast when we do finally get a rotation. So just keep that in mind, right? Everybody loves to play with these when the animal spirits are high and everybody's taking risk, but as soon as they need to dial back their risk, they will cut these fast. Look at that volume though, right? On that breakout. You hear about it all the time, like, oh, make sure you're trading breakout volume. And that's impressive breakout volume. And I still like this as long as it stays above the midpoint of the cup. So if we were to, snap a fib here, let's use the mid here. So basically $2. If we're staying above $2, I like it. If we get below that, I'm gonna have to reevaluate the trade in general. I don't want to say I'm gonna close it. So that's not technically true, but I would definitely have to reevaluate the trade. Maybe I'd add shares or maybe sell some puts or something. Not quite sure what I would do to be honest, but I know I wouldn't just sit tight holding a bag like that. It's not my style. All right, so that pretty much covers ONDS, unless anybody's got questions on ONDS. Um, I would definitely
Apple
have to
and
reevaluate the trade. Maybe I'd add shares or orale. What's going on with you, buddy? Oh, I was talking to somebody on YouTube. Well, oi, pinche cuero. Let's see. Apple. Hey, Apple. Everybody loves to hate on these guys, right? When they're down, everybody just bashes them. Oh, it's finally time. They're done. Their reign is over. The hate train is long and extended when it comes to Apple when they're down. And the crazy thing is, when they're at all-time highs, everybody's buying it. Everybody loves it. Apple's the greatest. It's just going higher and higher, and people are buying it at its highest prices. It's been like that as long as I've been trading. Somebody pointed that out to me really early in my trading career about Apple, and it continues to be true. Watch headlines, YouTube, social media. When this thing is down, man, everybody loves to pile on it and just talk about how poorly this company is run, how bad their products are, their sales are declining, blah, 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 blah. Then watch them break into new highs, and everybody's right there talking about, yeah, I just loaded up. I'm long, putting more in my portfolio, whatever. So I did add a trade to this one today. I had meant to get in the other day on Apple, but I've already got positions on. and I spent more time rolling those than putting any new ones on, and so I didn't get any new ones on until today. It's a $7 debit, and this is a diagonal trade, right? I sold October, bought December, 250, 265. Now I'm going to show you what it looks like on Tasty, but as I mentioned, Tasty does not do a good job with these curves, right? So this is the curve, and if you look at that, you would think, why in the hell would anybody want to trade this, right? That just looks broken. Like not much of a curve there, right? But Tasty just doesn't do these well. Even butterflies and yeah, even butterflies, especially like broken wings and ratio flies, it just doesn't do a very good job. So let's set this to the side and we'll rebuild it on Thinkorswim, which I think does a better job when it comes to calendars and diagonals. So we've got Apple October, 250 short, and December 19, 265 long. And it's basically trading for zero. Now, when I built it this morning, it was trading for 2 pennies. I could not fill at 2 pennies. I started working the order and I bumped it up and bumped it up, and I finally filled at 7. And it showed that I was immediately down $4 and that you could have traded it at 3. I still say BS, right? Like I couldn't fill it 2. I couldn't fill it 3. I couldn't fill it 4. I had to keep working the order until I finally filled at 7. And then immediately it said, yeah, you're down $3, $4, you can fill at 3. Whatever. I still haven't seen anybody fill at that price today. But this is the shape of the trade. And as you can imagine, it's $15 wide. So if Apple was to go completely to the moon, we're going to feel that. It would hurt. But we won't just sit there and hang on to it blindly when that happens, right? If Apple was to outrun us and break 256 to the upside, we would roll that short leg somewhere else, right? I'm not going to just sit there and take a $1,500 assault without doing something about it. But to the downside, since I paid $7 on mine, that is my max loss if Apple falls down, right? It's just $7. No big deal. The idea would be to close the entire trade all at once before it expires. So the front option is October 17. That's the deadline. If Apple falls down and has absolutely no chance in hell of staying, anywhere near 230 or 240, then just shut the whole thing down and move on. Right? That'd be the goal. And if I zoom in here, sometimes we got to use the Y scale. Come on, quit being a grumpy thing. We don't start going into loss. Let's keep it at like above $1 at least until Apple gets down to $201. So as long as Apple's share price stays above basically 201, then we'll have some form of profit in this trade closed on October 17th or before, right? That's our risk to the downside, $7 with a line in the sand at 201. That's not bad, right? Hold on, let me see. I had a question here. Uh, Almost there. All right. So that's not a bad trade for Apple on the idea that all we got to do is stay above 201, right? And for the rest of it, let me get the XY put back into place. It's all out of whack. For the upside, 256 assumes the resistance is in the way and likely holds us back, right? Now, I'm kind of counting on that, really. 256, it's right up in this ballpark up here. And I figure we would get to the gap close or something like that. We've just got all this resistance to deal with, and we got options, or we got earnings still between like December and all of that. So this is a tentative schedule, but it's October 30. So we're gonna want to deal with this before that expiration, which fits nicely because we got that mid-October expiration. We got the gap to fill, previous high here, and both of those will kind of work in our favor. There is another gap in there too, I think might slow it down too, because we want it slowed down a little bit, right? We don't want to get run right the hell over. And these things would work in our favor. So the downside's covered all the way down to $200, which I think is more than enough. And the upside is covered because we're likely to hit resistance along these zones or levels, and that would slow it down before that October expiration gets us. In this trade, if we do kind of stall out around the 250 area, the sweet spot be like right at 250, then we got 400 and something dollars. So, I mean, what am I risking? $7 for $400? I like that. And it's a diagonal. So each leg is individual. Just like with that XLF trade, at any time, we can roll the short call closer to the long call, right? And turn it into like a call debit spread or a call credit spread. We can remove a lot of the risk, lock in gains, all kinds of things, right? All kinds of things that we can do. And we'd have plenty of time to do it. So I like this trade. It does require a little bit of capital, right? $7 doesn't sound like much, but you still have to be able to cover all of this risk. The broker is going to want $1,500 for you to put that trade on, and that makes sense. But we're never going to take that kind of loss, right? I don't care if the world blows up. We're still not taking $1,500 in this trade. No, I will not take that sort of assault. So I liked it. You could try different expirations or different strikes if you like. I'm bullish Apple in the big picture. It is a bit extended right now, so it's a bit ahead of its skis. Had really nice breakout volume, not earnings either, right? It ran up and broke out on breakout volume, and then now it's kind of faded off a bit, but that's okay. We don't need the volume to be there the whole time. We just want to see breakout volume on the breakout day, right? And we got that. Left some gaps behind. That's always a little bit of a concern. And if we put it on the weekly, plenty of room left. We had that wedge that we came out of, really beautiful. And then, of course, we rolled back for earnings, and now we're continuing on with the breakout. Kind of want to see it stay above this 250, 225. but I'm flexible at this point. One of my concerns was the halfback on this whole thing, and that's 215 ish. It's where we were hitting our head here all these times. That's the breakout that really matters, I guess. So I like this one. It's not asking for much, right? In the grand scheme of things, just keep moving to the upside. And if we don't, I mean, the tent is really wide. It has a bigger slope than it looks like it does to the downside. So, we are right here right now. That's where we're at, 233-ish basically. So, the trade is fine. And as long as we stay above whatever I said, 201 or whatever, then we're still good. It's fine. And that's 300, that's $33 to the downside. I don't think Apple's gonna, go crashing and burning down there. And if it did, I mean that's when we would start to lose our $7. $7. You know what I mean? You can't get coffee nowadays for $7. It's fine. So that leads us to Baba. Baba, big old breakout on Baba. It does have a little bit of elevated volume, but I gotta say I'm a little disappointed this late in the day to see that little volume. At Investors Business Daily, they talk about breakout volume, and I was listening to him in a video once, and it was a new guy that was asking questions, and he's like, "So what kind of volume?" The guy's like, "Big volume," and the new guy is like, "Well, yeah, but can you like put a number on it? Like, what? How much volume? 100,000, 200,000?" And of course, we can't answer that, right? Because every single stock has a different volume level. And so the dude's like, "No, we can't really put a number on it unless you want to use percentages." The answer is you want volume that's so big when you bring up the chart, you're just like, damn, look at that volume, right? Like a wow volume is what they called it on Investors Business Daily. And I like that answer. If you're a trader who's focused on breakout volume, you want the volume to be so big that when you bring it up, you're like, wow, that's some big volume, right? That's the kind of volume. Kind of like back here. It wasn't earnings, big volume. That's some oh dang volume. This is really big volume, but it's earnings volume, and that don't count, right? So, anyways, Baba's had this line in the sand forever at 120. It has been an issue since all the way back here, right? So 120, 120, 120. It's been Baba's, just its critical juncture that it has struggled to get through forever and ever. And we are trying yet again to get above 120. There it is, right? That level right there, 120. It has done it before, back before COVID and all that. But since the tumble through the rest of the market's run, we were angry against China, right? If you guys remember, they were quote uninvestable was the phrase that was used on like Bloomberg, JP Morgan, Goldman Sachs, sending out letters telling everybody don't trade China. And so everybody just dumped them through 2021 and into the bear market of 2022. Everybody was just hating on China stocks. So it got beat down like everything else. And then it built this base. And I'm on a monthly chart. This base has been building for a long time. And now they're trying to take a run at that 120 level. Now it's a Busby, right? The thing is, it just overshot. So it's an ugly Busby. And then we started getting these lower highs, and those aren't cool. If you're trying to trade long, you don't want lower highs. So we had some issues with that, but we're getting this breakout again, right? So I was looking at the breakout today, and it's on news. And if you've ever done any research into Baba and Baidu, those guys are they're like our chip guys, right? They're like the Mag 7 of the China space. They're really important, really big companies. So they're getting the breakout and the push. And I thought, well, why not focus on this one? Probably could get a good trade. You see this inverse head and shoulders in there, maybe, right? It's there's the left, there's the head, and here's the right. Well, if that is an inverse head and shoulders, then we can measure from the shoulder to the head and we can project that whole thing to the upside. And it gets us above that point if we did that, right? If we make that measurement. So that's the base case bear argument on where we're going to at least that point at the bare minimum. And get there and then, we'll figure it out, wash it up. So let me show you the picture that I posted it in the chat this morning, but I mean, why tell you guys to go scroll for it when I can just grab it and post it? This is a broken wing butterfly, which is different than a ratio fly, right? Ratio fly, we would add more legs and strikes. Hey, Marzini, you have a good one, buddy. Sorry, I just caught that. He's gone. He didn't hear me. I'm talking to myself. So that's the broken wing butterfly. And this, I took a zoomed in shot of what it was pricing in the pre-market. I have not priced this once the market opened. I got busy. So we can go in and reprice it and see what it's actually trading for. SPX plays. All right, let's set Bubba aside for a moment and talk about the SPX here. So there are some generic trading concepts that really help to understand if you're going to day trade in the indexes, whether it's, SPX, NDX, the ETFs, SPY, QQQ. And that is that these things are they're self-reinforcing and they gravitate through a linear range, right? So unlike equities that can break out and run to the freaking moon, index ETFs do not do that. Same with the index sectors, right? So XLF, XLK, XLY, they always mean revert. Just, dig into that. They always mean revert. So if we have a really hard day in one direction, expect, you know, for that to stop and we're going to go in the other direction within a day or two. This is a very simple concept, but it's a very true concept, right? They always mean revert. And a lot of times they do it in the same day. So we'll get like a big down move on the day and then we'll just run back up on the same day, right? Maybe we don't get back to, the high of the day, but we'll at least try. There are exceptions to the rule. If we're in a bear market and every day is negative, then we'll just every day negative. The thing is, if you did go out to a daily chart and you looked at a bear market, say 2022 was the last bear market that we had, the last official bear market. Even in that bear market environment, we didn't just fall down every day, right? We had days of down, sure, but then we had days of up. And as I zoom in, what you'll notice is what they'll do in the pre-market is we'll gap up and then we'll get into the regular trading session and we'll trade through that gap up and we'll close lower on the day than we did yesterday. That's a red day. And then we do it again and we do it again and we do it again. Because if you just go red day, red day, red day, close, 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 lower, 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 you just scare everybody and freak the whole market out and it crashes and burns, right? Like these days. Look at the no wick, closed at the low, big gap down, no wick, closed at the low. That scares people, right? That freaks them out. So that's not typical. That's not normal. What we generally get is things that look more like this with that wick, right? So I'm going to zoom into that because I think that's a really great example. And remember, this is the SPX, so it doesn't even have the overnight part of the discussion, but it closed there. It gapped up to open here, ran up, and then closed lower, right? So you got to have a kind of a feel for what does price do on a day-to-day basis. It's the indexes. This isn't Apple and Microsoft and those guys. If you're wanting to focus on price action, don't waste your time with those guys. focus on these guys because it is different. From that, there's the expectation of how far does price move on any given day? Well, every market has its own rhythm, right? If you are a car guy or gal and you start your mower, it has a certain idle to it that's different than your car, right? Your four wheeler has a different idle, your motorcycle has a different idle. And you'll notice if the idle is off, it's missing, sputtering, it's not acting right. You also notice when you give it the gas, you throttle up on that thing and it responds. It's got a nice rhythm to it. Markets are exactly the same way. They generally have a rhythm to it. And every market, although I can't show this in a bubble, every market has a bubble around it. See, there we go, like that. Now, of course, this is an exaggeration, but on any given day, at the start of the day, if we were to put a bubble around price, that would be its range for the day to the high side and the downside. And we could expect that to follow price as it moved all day long. The thing is, no charting platform offers that bubble. You know what I mean? Like it just doesn't exist. But we have channels, and channels are like a bubble that didn't close. So within those channels, you could use Bollinger Bands, acceleration bands, VWAP bands, Keltner bands, whatever. Put a band on it. That band is your representation of how far price could move on that time frame. And then if we exceed that, you know that we're going beyond the average move of that particular time frame. The thing is, on a daily, we can run the numbers and we can figure out what a market's actual average daily move is rather than using the bands, the ADR. So we bring in the ADR, I can look at the SPX and look at the 21-day average. Remember, there's a market month is 21 days, 20 days. What have we moved on a day to day basis in the SPX in the last month? An average of 49 points. I'm going to say 50 for easy numbers. At the open, every single day, we could move 25 points up or 25 points down. And the distance between those two is 50 points because that's what it says, 50 points. So that's what these two red lines are. Those are the ADR halves. The thing is, what if we don't do what we normally do, right? Normally markets wave, they mean revert. We get half and half. So, price moves up and then down and up and then down and up and then down and up and then down. That's what we do. But what if we don't actually mean revert and we just run 50 points in one direction? That would be the yellow line. Or 50 points in the other direction would be the other yellow line. So on any given day, we can just bring this up and ask, what should we move today? If we're acting normal and we're going to mean revert, we should stay within the red lines. If we're not acting normal and we're just going to get bullish or bearish, we should go to the yellow lines. But those are the standard range for the day for this particular market. And then, of course, we have them for the week as well. Different calculation, different numbers, but it's still the range for the week. We can look at the weekly range and say, have we even made the weekly range yet? And if we have not made it, how far away are we before we do hit it? If we have already hit it, then what's the expectation at that point? Well, I mean, base case would be that we mean revert and we come back in again, right? Because just as I was talking about, that's what markets do in these markets, not all markets, right? Not Apple and Microsoft. These guys mean revert. So that's what we would expect them to do on a day to day basis, or in this case, a week to week basis. We closed there on Friday. We could go anywhere in that range and it would be just considered a normal average week because this is just what we do. So, with all of that in mind, right? Now we can start to think about the intraday and how we would want to play it on a day to day basis. I don't like the default idea of just trading every single day a 0 day option just because we have 0 day options to trade. That is a really bad idea because it has to fit back on, well, what do we expect today? Remember on Monday, we didn't expect anything because it was supposed to be a sideways day. So, sideways day, iron condors, strategic butterflies. If we reach the high or the low of that day, we could try to do verticals in the other direction. But we wouldn't have wanted to buy options Monday for an intraday trade because we really didn't have any expectation of price going anywhere. Yesterday, on the other hand, we knew there was fire at 8:30 and that when we opened at 9:30 it was likely to be wild and violent. And that's exactly what we got, right? Wild and violent. So the tone for the day comes from the work we do in the pre-market, if there's any to find. I don't want to make it sound like you're always going to have an answer before the bell rings because you won't always have an answer before the bell rings. But if you can anticipate, great, right? We could really anticipate Monday. That was awesome. Tuesday, it gave it to us on the run. So it was great. And then today, eh, pretty comfortable with the idea that we were, going to wash it back. And we washed it back. So I did mention I put on a SPX trade today. This is not a 0 day, by the way. It is a little longer than that. It is for August 20, and it's just a regular butterfly. It's 30 points wide, so 60 points in total from side to side. And I put it on because we were bearish this morning. So these are puts, and they're below the market. I wanted a put spread, but I didn't want to pay put spread prices, right? Because it's the SPX, and the SPX is expensive. So I put on uh, this thing. Let's see if we can put some color in it. There we go. I do like Tasty when it comes to verticals and the red and the green. If I can just zoom in on this a little bit. There we go. Why are you being so touchy today? My goodness. When it comes to this butterfly, it's 60 points wide and it's going to expire in a week. And I was feeling pretty good about the idea that we would fall back down. So that's what I went with. Come on, where are the strikes? Some days I miss Thinkorswim when it comes to just zooming in and zooming out. There we go. Good enough. I don't want to try rolling it any further because it'll just jack it up. So short term trade, I put it on right here. And the expectation is that if we continue to fall, because this is where price is, if we continue to fall, it'll land in that sweet spot. But it's a butterfly that has time to it. So it's already got profit. It was up 50% of what I paid for it. I paid $2. I could have closed it and made $1 profit already. But I didn't want to do that yet. If I was going to trade it that way, I would have traded a shorter duration trade. I'm going to leave it on, and very likely I will end up making some sort of adjustment to it. There it is, right? I can kick one of the legs off and turn it into a broken wing fly later on in the week as things go by. And the reason that it's making any profit at all right now, it's trading for $2.50. So I've made 25% profit, 20% profit. The reason it's made any money at all is that short leg combined. Each one of these, look, I spent 990 and it's worth 940. I spent 2010 and it's worth 2070. And then the one in the middle, I collected 14 and it's worth 390. So these two are making me money and that one's losing me money. And combined, I've got a net profit of $50 at the moment. That's just a regular butterfly, but it's a really wide butterfly and it has 7 days to expire. So that trade today is not the kind of trade that we're looking for. On any given day, if you want to trade in the indexes, I like to focus on these reversals. Now, of course, timing reversals is a bit of a fool's gold game. You never know that it's the low until we leave it and we look back later and say, hey, that was the low. And you never know that it's the high until we look back later and we say, hey, that was the high, right? Like I promise you will never know in advance, right? So I don't like to buy puts when we're falling. I don't like to buy calls when we're running. If I have to buy the call and we're already green, I would rather just not do it. Same with the put. If we're already falling, I'd rather just skip the play. And the reason for that is the pain and the loss of the trade, right? So you have to try to buy the put when we're still running, and or you have to try to buy the call when we're still falling. I know it sounds bad when I say that, right? Like, well, what if I'm wrong? I'm going to get a loss. Yes and no. You will lose, right? If you buy the put and we don't actually fall, then yeah, that put is going to lose. The thing is, it's going to lose less than if you had waited. Let's focus on this point right here. Say you bought a call while we're still falling and you buy a call. And of course, I mean, look, we kept falling, right? That call would lose a little bit to be sure, get your hand smacked. It won't be very much and you move on. But if you had waited and we started to go up and you bought a call, say right here or right there, and then got these reversals, oh my goodness, your trade would be down immediately 25%, maybe more. Just you're going to get smacked so hard and fast, like it ain't even funny and it hurts and it's swift. So if you don't have a PDT account and you're like counting your trades, and you're like, well, I'm going to do 2 good trades a week and then I'm going to have to sit out, but don't trade this way, right? Because that ain't going to work. You're going to have to swap over to like a cash account or something. Because with these trades, the way that I'm discussing them, if they're not right, you just need to immediately get out of it and wait until you are actually at the low and or that you are actually at the high, which, like I said, you'll never know in advance. But there are some basic assumptions like measured move and all of that stuff. It should turn at the turning point. But if you're waiting until it turns green to buy the call, or you wait until it's red until you buy the put, and then you are wrong, oh yeah, it's significantly horrible. It lost big, hurts. Then you focus on the short versus the long. Dealers and big traders, and traders who day trade frequently. A lot of us play the short side. It's a cheaper, easy, not cheaper. It's an easier way to play, right? We never know if a day is going to be one of these blowout runner days that just keeps going and going and going and going and going all day long. We got a pretty good idea because of Gamma and other models that it could be something like that, but we never know for sure, right? At least not in the pre-market. So then as it's going and it's running and running and running and running and running, we never know if it's going to stop. It could stop at any time, right? But on a day like that, to go in and just sell a put spread along those lows, right? Which I know we never know that it's the low, right? But say you got the hold pattern, we've already turned, we're starting a TRB, we're headed to the upside, and you sell a put vertical right there. And it's a 0 day, it's going to expire today. Then price comes up and breaks the high on the day and continues to run. You can roll this one up and get money in it, or you could just leave it where it was and add another one, because now with price up here, it's got to break that level to even get to this level, and it'd have to get through that level to get to you, right? On this one down here. So these put vertical shorts, all they need is for price to just stay above it. That's it. It doesn't matter how far price goes, as long as it doesn't come back down, that trade makes money. I really like that kind of trade, because trying to say how far a market is going to go and then get paid for how far it moves, that trade in options is a lot harder than it sounds. What strike you use, what expiration you use, how long you hold it, all of that comes into play. But these, just selling the open and vertical, are a lot easier to trade. You can scatter them out into different expirations. You can roll them intraday. They're approachable. So I like using those verticals, putting one on in the morning and then holding it into lunch. or putting one in on uh, the outside of lunch for the afternoon. Break your day down into 3 days. You got the morning session, and then you've got lunch, and then you've got your afternoon session. And if you treat it that way, with the market having three sections, use your morning trades and then use your afternoon trades, and avoid opening new verticals during lunch. Lunch is a figure of speech, right? It's not like they're actually calling timeout and going to lunch. Just the market changes its behavior between, say, 11 and 12, or between 11 and 12:30, so that by the time we get back around 1, we usually see that behavior manifest in price, and we get an afternoon that oftentimes is completely different than the morning session, like this reversal at noon on Monday. When it comes to levels on options trades, like say that butterfly, I was looking a little bearish, right? Not like heavy bearish. I was looking a little bearish, and I was looking at how much the trade was going to cost. Because really, a lot of what I do is just what's it going to cost me? $2 was not bad for a $30 wide butterfly, right? Because a $30 butterfly, that's a lot of money. You know what I mean? That's a lot of money, and I'm only risking $2 for it. So if I go in and I try to price a trade and it's $2, I mean, it's figurative to everybody. $2 is not much to me. I'm comfortable risking, $200. You might want to have an SPY trade that's risking 0.02, 2 pennies. It just has to fit your account size and your stomach for risk. I've got 64. Let's spread these out here. I've got a 64 butterfly for August 20. 64 is a big round options level. So I was really comfortable choosing 64. And then I want to make it wide based on my risk. So 64 is my target. If we fall, where do I think we're going? To 64. That's my target. I went 30 up and 30 down just based on how much am I willing to risk. If your risk is less, don't go so wide. The wider you make it, the more likely it is that we land inside the tent, right? Make sure I don't have other trades on down here. This is the trade that I have on. And you can see that the tent is pretty wide, right? It's 60 points wide, all things being equal. If the S&P falls, I think it will go to 64. With that in mind, I started pricing a butterfly, making it wider and wider and wider until I seen a price that I was comfortable losing. And that's where I stopped. The wider, the better in terms of your net to catch price. Think of a butterfly net, right? Like a real net in your hands. And you're running around, trying to swipe it in the air to catch butterflies. The bigger the net, the more likely it is that you're going to catch a butterfly. Well, this is my net, and I'm swinging it around in the air trying to catch a butterfly. And I made it as wide as I could risk comfortably. I could have used the weekly expected move levels, right? 63.89, that would have built me a butterfly at like 63.90. That's fair. It's Friday's close of last week, and it's the midpoint for the weekly expected move. Absolutely nothing wrong with that, except I generally use these levels for this week's expiration, and I put on a trade for next week's expiration. I don't have next week's levels. So you could still use this. right? If you're looking for a short-term short, um, that would be a target for this week. The problem is we have OPEX this week, options expiration on Friday, and it's very likely that we don't even sell off into OPEX. I want to turn on Friday expirations here. Show Friday expiries. Because you can go back and look at, previous weeks where there was an expiration, like this week, and you can see how we really didn't do much on the week, right? Or back here, that was an OPEX week, and we really didn't do much that week. Now, I'm not saying that we're always going to have a week where with OPEX where we don't do anything, but you know what I mean? Like, don't expect big blowout moves on an OPEX week. So I'm just randomly, like going back and grabbing weeks. We stayed inside of Tuesday's range for the most part for that whole week. This one we moved. That was a heck of a move. That was a considerable move on an OPEX week. Big gap down on the last day. Very likely had news or something. But for the first part of the week, up until Wednesday, anyways, things were looking pretty good. We were holding the range, just doing our thing, and then it got bad Thursday, and it carried into the overnight into Friday, and we really sold off. So, of course, news, you know, can always break things. As this week, news broke us out on Monday, or I should say on Tuesday, and now here we are. Remember, we're not looking for a real solid short in the market. I put that butterfly on for a short-term short. It's a couple of days. That's it. No big picture, load them up, sell them short kind of stuff. So if you're going to try to put on your trades and you're looking for levels, those ADR levels are really good levels to focus on. And so are pivot point levels. So I can just go in here, and turn on, say, floor pivots. Floor pivots have SNR levels. So we opened above R1, smacked R2, and sold off back to R1. You know what I mean? Like these are just your basic everyday floor pivots. Go into your broker and type in SVE. Those are the SVE pivots. Just turn mine off. SVE pivots, right? Didn't look exactly like mine, but maybe person's pivots. It's closer. And mine, I've shared it too. It's in the Discord. I'm happy to share it again. Then there's the call walls, the put walls, all that stuff. But those move, right? On a day-to-day basis, those move, and it seems like everybody's got a level. I remember when I spoke to Mentor last year, they were so excited about their tool, and bragging about their expected move and their daily levels. And I'm like, yeah, but bro, everybody's got those. I can go to Trading Ticks, Spot Gamma, Mentor Q, Volland. Everybody's got an expected move, including the brokers. Like my own broker has an expected move. What I share in the morning is uh, two indicators for Thinkorswim and one indicator for TradingView. I don't have both for TradingView. This is the chart that I show in the mornings, and it has Mentor Qs, not Mentor Qs. It's got Spot Gamma's levels, these levels right here. The call wall, the volatility trigger, the zero gamma, and there's a put wall somewhere right there. I share that every day in the chat so that all you have to do is just copy the code that I share in the chat and paste that code right here because it has to be updated every day, right? So you just copy all of this and hit delete, and then you copy all the code that I sent and put it in there, and it has the date right up at the top so that you know today's is current. Because if you're like me, maybe you forget. I have to check. I run two computers at once with one keyboard and one mouse, and sometimes I'll update, the left computer but not the right, and then I forget, and then I have to check. So every day you can check that. But what I like to know, which is also what I post in the Discord, did they move? Because a lot of times they don't even move. And if they did move, where did they move? Did they move up or did they move down? And then there's people who can't import the levels, right? Maybe they're on Fidelity or Schwab uh, Web or something like that, and they can't physically install those levels. I also share something for those guys, right? So if we scroll back and look at the posts in the morning, well, I went too far. Did I not share this stuff this morning? It was a busy morning. I was fighting with Spot Gamma this morning. I'm just going to post them now. Here are the three indicators. And then I share that. And I'll bring this over to the live stream for people who are watching the replay. Just give me a moment. All right. So every morning, these are the indicators, and it says the name. Like that's the Thinkorswim levels that I use. That's why it has my name in it. And these are options levels to be used on TradingView. This is Thinkorswim. That's TradingView. And their mine has my name in it, OAC. These are from Spot Gamma, Thinkorswim levels, and it has the date. That way you always know what am I getting. And you can read, sometimes I share the wrong one. You can read it and it says the 13th. That way, if I say it was the 12th and that says it's the 13th, you can be like, hey, Sig, you got that one wrong, man. I've done it. It happens. This is the flip point for the day, 63.51, or if you're trading SPY, 640 and 70 cents. So there's your intraday GEX flip, and it also has your bullish and bearish rating from the gamma structure. And then these are those call walls and put walls for anybody who can't import the levels. So that you can just look at it and say, okay, SPX 6000, that's the put wall. 6312, that's the zero gamma. 6395 is your volatility trigger. And then there's the call wall at 65. And you could physically just draw the lines if you can't import the lines for yourself. But did those lines move between yesterday and today? And if they did they move up or did they move down? I used to just leave it to where my answer was you should go look at yesterday's. Because I mean, that's what I always do. I look at yesterday's and then I look at today's. But I heard a lot of people say, that's just too much work. So I started to share this if there was a change. If there was no change, I don't bother sharing this one. The puts are in blue, the calls are in pink. If they are flat, then that means nothing moved and I won't share it. I won't even bother. If they moved, like the puts, they moved down, right? Which I mentioned in the live stream this morning. They rolled the puts down. Okay, but the calls didn't move. They moved yesterday, but they didn't move today. So I didn't mention those. And that way we can tell every day, not just, hey, where are those levels, but how long have those levels been there? 1 day, 2 days? Have they been there a week? Because, man, if you get levels and they've been in the same spot for weeks, they build up a lot of structure around those levels. You kind of want to know where they're at. So that's the everyday. But there's no magic to any of them, right? Like knowing where they're at is great because if we're going to hit one, you kind of really want to know we're going to hit it. But otherwise, are we going there? Who knows, right? Like just because the line is there doesn't mean we're going to go to it. And some of them, like the put wall, are so far away, it is worthless. You know what I mean? Like, who cares if we got a put wall at 60.23? We're not we're not going to get below 64 today, let alone 63, 62, 61, and then get all the way down to 60.20. So screw that put wall. It doesn't matter. Zero gamma, who cares? It's way too far away. Volatility trigger, okay. Now that one, we could have hit that one today. We could have if we'd have started moving in the right direction early enough. And then we never know who's in control. Is options moving the market today, or is it something else? Dollar, bonds, yields, commodities, treasuries. We don't know what's moving the market until the market's moving. And if 0 day is going to come into play, or if options are going to be a big deal, we won't know until after 9:30. So we need to be ready for it, but we should focus on other things too, like why is price moving in the first place? To have a better idea of which one of these levels could we hit if we even get moving in that direction. The other indicator that I share that's spot gammas, by the way. The other one that I share is for my levels. I need to update my levels on this platform. So give me just a second to bring up the same thing I shared in the chat. OEC toss levels for August 13. Open up the code. You can see the last time I updated it over here was June 10. I don't usually update this computer with that one. And this one does equities. So it's got Apple, Baba. It's running my watch list, Microsoft, whatever. And then, of course, you can look at SPY, QQQ, but it does equities. The one from Spot Gamma doesn't do equities. So every day in the pre market, I do the morning briefing and I'm trying to help people answer what today is going to be. Is it supposed to be a sideways day, a range day, a trend day? And if we know that answer like we did Monday, I was really confident about Monday because I mean it was like an easy layup. When we have a solid idea what the day is supposed to be, we can really hammer the hell out of it. When we're less sure or we're unsure, then we change the model and wait. So I like to change the kind of trading that I do to fit the information that I have for that day, if I have any to play on. If I don't have any, then we just don't have any. But take advantage of it when we do. So for a range day like this, I like to do at the money put credit spreads. If it was against the highs, it would have been at the money call credit spreads. I like those better than the out of the money options because those are just complete trash, and I don't like that approach. It just doesn't suit me. I know that's what they teach on, all the YouTube gurus out there, but I don't like it. You can do the same thing, over here with the at the money call credit spreads. And then you aim for anywhere from 30 to 60% of the max and close it. I do like the wheel trades, just not for SPY and SPX, right? And definitely not for 0 days. But the wheel is fantastic. With these, it's just, you know, 0 day, close them out before the end of the day, 30 to 60% profit. I have gone wide if I'm going to do wide, like SPX. The idea behind that would be, say you open up something like 64.75 and 65.25. That's the size of your call vertical. It's this big. And then, collect, I don't know. This one would probably give you, say, $7. So you got $700 in credit. It's not a lot of money, right? This is a poor example, but would have opened that, you know, sometime around the high of that morning. I like more credit than that. If it's 50 wide, I want to get at least 15 to $18 in credit for a 50 wide trade. I'd like to say I want half, but you don't get half in the S&P. So what we're talking about here is 0 day selling something like the 25 and buying a 25. Screw it. We'll just go big like that. That's a $100 wide spread, and they're only offering $37. That's $3,700 credit for today. It's a 0 day trade. Now, I went a little big with that, but the logic still holds, right? So there's 50 and 80. It's a 30-point spread. What just filled? Hey, the XLF filled. So now they're both in the same expiration. We have a short call vertical, right? Or a call credit spread. And this trade, it says 16 cents negative, but remember, it's all about brokers and how brokers show the trade. So here's XLF, the original position, and then the roll and the new position are holding it with a trade price of 34 cents credit, and it's trading at 29, so we're up 5 cents. Yeah, they just don't do a good job of laying out the trade. Cuz see how it's 34 here and it's 16 there, and it's just confusing to people. But that is our new position. If you guys didn't catch the roll yet, which I'm going to end up having to put it in the chat so that everybody knows we did a roll. We're rolling the XLF trade that we put on last week, turning it into a call vertical. There we go. All right, so that's the new position. But these really wide verticals are my approach, and I believe me, I don't do these really wide ones all the time, but when I when I can, I do. The thing is with the SPX, you never get a fair price. It's if it's $5 wide, you should get $2.50 in credit. You never do. It'll always be less, and you're not on the benefiting side, right? So if I build it 50 wide, I should expect $25 credit. You don't get it. You get like 21 or maybe 22 if you're lucky. So, just be mindful of that. And then you got to grow into them. Putting on a $50 wide spread or a $100 wide spread, it's scary. You know what I mean? That's if it's $100 wide and you collect $50 in credit, that's some scary numbers. What I see a lot of people do is they'll put it on small and then they just trade like a 10 lot or a 12 lot or a 20 lot. I mean, I get it. That's okay too, because then you can fade the play, right? You can take some off and then you can take some more off and you take some more off. But sometimes the benefit to you is the width, right? Sometimes that's the whole point of the trade is because of how wide you made it. At other times it's just about money. So then if it's just money, put more lots on. And then I am showing one in the money and one out of the money because that's my default positioning. But a lot of times I'll go like one strike out, right? Go one out of the money and then put it on. There's no time left in the day. There's only like 4 minutes left, 5 minutes. So these have no prices. But tomorrow, let's just look at tomorrow's here. We can be out of the money, like two strikes. That's too far for me. Let's get a little closer. And I've still got, some credit here. What I don't do is go like way out here. I don't do that trash. I know it's popular, but I don't do that. So if you focus on the things that we talked about, markets mean revert, that you have yesterday's levels always. I mean, look at today. Where did we stop falling? Yesterday's price. Was it to the penny, to the tick perfect? No, but I mean, where did we turn? Yesterday's price. That's not random. If you go back and look at how often we tag yesterday's high or low or close or open of the previous day or the previous week, we do it a lot. And then that ends the move and we stabilize and then we go the other direction. And it happens way more than you would think. I remember I did a write up for my coaching clients once where I went back, and this is called the hard right edge. I don't know if you guys have ever used this kind of a market replay style. It's what we used to do back in the day before we had all these fancy platforms that could do market replay for you. So you go into the past, and this is your hard right edge, right? This is where's my drawing? There we go. So this is your hard right edge. This is what you're focused on at the moment. And if you set your mouse wheel to roll one candle, when I roll my mouse, I get one candle. Then I can go another and another, and it's just giving me one candle at a time. So if you was to go back, just pick a random spot, scroll back. Wherever you start, mark out what you have of value. This gap is valuable. If we keep moving the chart to the right, I would bet that we interact with that level again. So I would want that one. And then, of course, the other side of that is the channel top. So that's a level of interest. And then, of course, the high that we had at the time would be a level of interest. So from here, anything of note that is important? Nope. It looks like we broke the previous day's low and we expanded below it. The only thing that I could say that might have been at note is look at where we opened. We basically opened on the previous day's lowest point. All right, so that's one of the open high low closes. Then we look at the next day, none of those, right? We broke the previous level. We didn't stop anywhere along the way. And the low of this day was really close to the low of this day. Couldn't tell on a glance if we hit that or not. Sure does look like it, almost to the tick, right? Imagine how often that happens. More than you think. And if we run it back, it looks like it was the high of that day too. Not quite to the tick, but dang close. Open high low close, right? Again. Roll it another day. So it wasn't this close. We ran through all of those. This high doesn't match any of these open high low closes. So nothing came into play there. The close of that day was really close to the close of this day. But other than that, nothing. Previous high, previous high. The lows overshot here, but barely, not by much. See how they become price targets when we're falling and we break the open and then we break the close and we're still falling. Like, where do you think we're going to go? Probably to the low of that day. Maybe overshoot it and go to the next low. That almost matched. Remember that gap that we were talking about? We didn't get there, but we almost got there. Didn't get there that day either. But we got to the previous day's low. So there's a lot of answers out here just by going from one day to the next day to the next and asking questions like where was our high, our low, our close? What about the mid? I didn't mark the mid on any of these, but I bet if I had, we'd see how price was responding to it the next day. And this is all from the daily. If we had gone into the intraday, we'd see even more info about these levels. And I didn't have to buy a subscription to some crazy expensive service. It's just focused on the most generic and powerful information that we all have: open, high, low, close. That was almost to the tick to the close back here. So that'll help with your idea of where are we going on a day-to-day basis. What's in that direction? The previous day's high, low, close, the previous week's close, high or low, anything that we can hit, floor pivot, ADR, and then the options trade itself. Getting in long while it's still red or getting in short while it's still green. That's hard to do, by the way. And I really encourage you to do it in paper as much as you can first, just to get used to the dynamics of it, because you're trying to call a reversal before we even know it's a reversal, right? And you don't want to wait until you have confirmation. There's a market phrase that says you pay for confirmation. And oh man, that is very, very true, right? It's true on a number of reasons. One is because of how far away your stop ends up being. But two, when it comes to options, it's how much did you have to pay for that option? we're going to use today, and I'm going to go in and chart a call option. Where was the low today? 64.45. 64.45. Thinkorswim has an indicator called comparison. And what it allows you to do is put a stock price in there. Only we're going to put an options price in there. And we will make it, I don't know, white, I suppose. Let's make it fat. Oh, it won't let me. Fine. And it didn't remember anything I told it. See if it remembers it this time. There we go. So that is the price of that call, right? Was that 0 day? No, that's tomorrow's call. Let's make it for today instead of tomorrow. Just got to change the 4 to a 3. Now it's today's option. So that's the 0 day call. And we actually ran up off of this low, but I should have done it when over here. That'll work. So focus on this side of the screen. Look at how fast that call started to lose money, right? I mean, it lost very fast. And this little bitty bump, if you thought that the market was running up and pulled back a little bit and was going to run up more, and you tried to buy a call right here, it made a very minor amount of money. And then look how much it lost in just, like 3 or 4 bars. It was a face ripping loss very, very fast. The distance in the loss between, say, these 2 red bars, these 3 bars in a row, it's a very small amount of loss. I know this isn't the greatest place to. Oh, why'd you do that? This isn't the greatest example, but it will fit. These 3 red bars, that's 15 minutes. I'm on a 5-minute clock, right? In 15 minutes, it only lost this much. It's a very small amount. But if you had tried to buy the call when it was green and then it went red, you lost that much, right? So if you're wrong and it's already moving in the direction you think it is, the options price, first, if it's green and you're buying calls, the options prices are very expensive. If it's red and you're buying puts, the options prices are really expensive, which means as soon as the trade starts to be wrong, they will rip you apart. But if you buy the puts when we're still green, the puts are cheap. Nobody wants the puts. They're selling them cheap. So buy the puts. And if you're wrong and the put loses, it will be a small amount of money. Like, well, I'm wrong. So what? You get your hand slapped, you move on, and you move on. It's just a small loss. This concept gets lost on new traders because they're focused on, well, I don't want to lose her. I don't want to lose her. I don't want to lose her. I mean, I get it. I don't want to lose either. Nobody wants to lose. But if you are going to lose, it would be better to take a small loss, right? Because you can't have a goal that says I'm just going to make sure I win all the time. Yeah, that's unrealistic, right? So you can't have a goal to win all the time. Instead, you want to have a goal that helps you manage the losers when they're wrong and manage the winners when you're right. And by trading calls when we're red and puts when we're green, before the market turns, if you happen to be wrong on the flip, then your losses are much smaller, way more easy to manage. And your winners turn into winners so much faster, right? When you are right, they monetize really quick. I don't know if you guys have noticed, if you're day trading and you say you buy a put right there and then it runs down here and you sell the put, you're like, yeah, baby, I knocked that sucker out. And then you go look and you made like what, 60 cents? Like, what the hell? It moved all this way. It's the SPX. Why didn't I make any money? This thing's so crazy expensive. Yeah, but you bought the put when we were already moving in that direction. You didn't make very much. But if you had bought the put when we were still rising and you sold it right there, I would bet that you made a lot of money on that in that short period of time, right? Because the whole market was still bullish at that point. And just that much would have been a game changer on that options price. I should have left that call up so that we could see what it actually did make. So it is hard to do what I'm talking about. It's tricky as hell. But you can get a feel for it. And you have to just get to the point also where you're not scared of taking a loss. Shoot, we needed the put, didn't we? Not the call. So let's change that to a put. And let's go with a 64.75 put. Oh, yeah. Look at how fast that put changed in just that short amount of time. The put values are here on the left, by the way. So it opened at like 18-ish. It dropped below 15, and then it was back the other way, and it was above like 18, closer to 19. Well, let's call it 18 and a half by the time it got here. So $300 ish, say from 16 to 18 and a half, $250, $300. But if you had waited, and this is obviously it's just a candle close. I'm telling you, the money is there, right? That's the main takeaway. Yeah, that's what I thought. It didn't even. You will feel the difference. Your P&L will be different. Your losses will be much smaller. Your wins much greater. It is a significant change. Now, there's mechanical trades that I like to do that have nothing to do with timing the trade, and you can be more flexible, right? And this is, I don't want to use the word better, but it's a lot easier for newer traders to focus on mechanical trades. And I've got videos on the bullish bears for these trades. For an example, and this isn't all of them, but these lines offer us a chance to do mechanical trades. And by mechanical, I mean that you have no input on it. Your gut or your feelings or whatever has no bearing, and you don't need any technical analysis whatsoever. If you do add some, it's great, but you don't need it, right? That's the key. You don't need it. So, with that in mind, maybe sell some puts or something. Not quite sure what I would do, to be honest. On
I know I
any
wouldn't
given
just
day,
sit tight,
you could look at the
holding the bag
next
to look
day
like that.
and you could
It's
put
not my
butterflies on any
not
of
my
these
style.
levels. So, all right, so that
Friday of last
pretty much covers ONDS,
on
unless anybody's got questions on ONDS. For three or I would definitely
Apple
have to reevaluate the trade. Maybe I'd add
and then
shares,
even on a day like
or today, when it was still market open, we could have looked at tomorrow and put a butterfly
Orle.
at 6,400.
What's going
or
on
even
with
all
you,
the way
buddy?
down here at 63, 11 cog line. I know that seems like a long ways off, but we can go from one side to the
I was
other
talking to
in a single day.
somebody on YouTube.
We have done it before, and we will do it again.
Well,
Right? We do it a lot more than you would think. And since that one is
Let's
so
see.
far out of
Apple.
the money, that
Hey, you
butterfly
know what?
would probably
Apple,
be 5
everybody
pennies,
loves
right?
to
Because
hate
it's
on
the
these
SPX.
guys,
You can't get
right?
it
When
any
they're
cheaper
down,
than 5 pennies. everybody just bashes them. Oh, it's finally
And
time. They're
the
done.
chances
Their
that it's
reign
gonna
is
lose, it's
over.
really high,
You know,
but
the
it's
hate
$5, you know
train
what I mean? And when
is
you do
long
win,
and
you're talking about
extended when it comes to
$400.
Apple when they're down.
So, yeah, you risk
And the
$5.
crazy thing
You
is,
win, you could
when
make
they're at all-time
350,
highs,
$400.
everybody's buying it. Everybody
It's
loves it.
middle.
Apple's the greatest. It's just going
You could even
higher and
put one
higher,
against
and people are
top.
buying it
Look
at
at
its
Doji
highest
tomorrow,
prices.
right?
It's been like that as long as
Those are
I've been
really easy
trading.
to
You
do.
know,
The
somebody
other one that
pointed
I
that
like
out to me really
using this
early in my
indicator
trading career
is
about
reversing
Apple, and
from
it
the edge.
continues to be true.
So
Watch
we hit the edge
headlines,
today,
YouTube,
putting a short
social
on
media. When this thing is
or
down, man,
a call
everybody
credit spread up here,
loves to pile on it and just talk
which is
about
like a
how
neutral short
poorly this company is run, how bad their products are, their sales
for
are
the end of the week.
declining, blah, blah, blah,
It
blah,
just
blah.
says, I don't think we're going to close higher than
Then
this
watch them
level
break
by
into new
Friday.
highs, and everybody's right
As
there
long as you
talking
do that
about, yeah,
before
I just loaded
Thursday's
up.
open,
I'm
you're good.
long,
So if
putting
it's
more in my
Monday, Tuesday, or
portfolio,
Wednesday and we hit the
whatever.
edge of the week, try going the other way
So I did
for
add a
the end of the
trade
week.
to
But
this
if it's
one today.
Thursday or Friday and we hit the
I
edge,
had meant to get
don't
in
do it, right? Because
the other
we're
day
more often
on Apple, but
likely to
I've already got positions
continue
on,
to move.
and I spent more
Here's
time
an
rolling
example where
those
we
than
got
putting
there on
any
the
new
edge
ones on,
on
and so I
Monday,
didn't get any new ones
Tuesday,
on until today.
Wednesday.
It's a
That's been
$7
great by the end of
debit,
the week.
and this is a diagonal trade,
But
right?
it's not
I
100%,
sold
right? We got there
October,
on a
bought
Monday.
December,
We closed
250,
underneath it on
265.
Friday. We never
Now I'm
even
going to
made
show
it
you
back
what it looks
inside the
like on
box.
Tasty, but as I mentioned, Tasty
Got
does
there on a
not do a good
Wednesday,
job with these
got
curves,
back in the box
right?
on
So this
Thursday,
is the
still
curve.
closed outside of the box on a
And if you
Friday.
look at that, you would think, why in the hell
But
would
playing
anybody
the
want to trade
reversal
this?
off of the
Right?
edge,
That just looks
especially if we
broken,
get there on
right?
like a Monday or a Tuesday, I like
Not
that
much of
one.
a curve there,
I
right?
haven't played it much recently,
But
but I do like
Tasty
that one.
just doesn't do these
As a
well. Even
mechanical play, it's
butterflies
not
and
bad.
yeah, even butterflies, especially like broken wings and
I've
ratio
even got
flies,
other
it just
mechanical
doesn't do a
plays
very good job. So
like
let's set this to the side and we'll
it's
rebuild it
Tuesday,
on
buy a call.
Thinkorswim, which
I did
I
that for
think
a whole
does a
year.
better job
Every
when
Tuesday
it comes
before
to
noon,
calendars
I
and
would just buy a
diagonals.
call. That was the only
So
rule.
we've
Just
got
buy a
Apple
call
October,
before noon on Tuesday. That's it. And
250
I did that for the entire
short,
trading year, and it was profitable.
and December
No
19,
analysis whatsoever. Just remember, markets want to go up.
265 long.
So in 2022 bear market, that probably would not have
And
worked
it's
out too well.
basically trading for
But
zero.
most
Now,
of
when I
the time,
built it this morning, it was trading for two
works. And
pennies.
the year that
I
I did
could
it,
not
it
fill
was
at
COVID.
2 pennies. I
I didn't
started
know,
working the
right?
order and I bumped it up
Nobody
and
knew
bumped
that
it up,
COVID
and I
was
finally
coming
filled
in
at 7,
December,
and it showed that I was
November, and
immediately
December of
down $4
2019.
and that you
Nobody
could
had
have
any
traded it
idea,
at 3.
right?
So I
I
would still
putting the
say
plan
BS,
together
right? Like I couldn't fill it 2, I couldn't fill it 3, I couldn't fill it 4. I had
in
to keep working the
2019.
order until
So
I
that
finally
when January
filled at
came,
7,
I
and
was
then
ready, right? That was the
immediately
whole
it said,
idea. So
yeah, you're
January
down
came, I started
$3,
running that
$4, you can
trade
fill
and
it
a
3.
lot of other trades.
Whatever.
I had a lot of mechanical
Still
trades
haven't seen
put on that
anybody
year.
fill at that price today. But
The
this
new
is the
year.
shape of the trade. And as you can imagine, it's $15
So,
wide.
January,
So if
February, and then
Apple is to
then
go
went COVID.
completely to the moon, we're going to feel that.
It would
I
hurt.
didn't stop running the strategy
But
just
we
because
won't
COVID
just
hit. Sit there and hang on to it
I was buying
blindly when
long
that
calls
happens, right? If
every
Apple was
Tuesday
to outrun
through
us
this whole move,
and
and
break
then, of course, back
256
out
to
the other
the
side too.
upside, we would roll that short
Strategy
leg
still works.
somewhere else, right? I'm not going to just sit there and take a $1,500 assault without
So if you want
doing
to trade
something about
mechanical,
it.
you can.
But to the downside, since
The
I
rules
paid
can be arbitrary as
$7
they
on
seem to be,
mine, that
or you
is
can get
my
really
max
exact and have
loss
very
if
specific
Apple falls
rules.
down, right? Just $7. No big
This
deal.
is Options Omega.
The
Is one
idea
of
would
the
be to close the entire trade
greatest
all at once
options back
before it
testing
expires.
company
So the
that I've
front
ever come
option is
across.
October
And
17.
they're
That's
really
the
awesome when
deadline.
it comes to user
If Apple
feedback on
falls
how to make the
down
platform better.
and has
Now, it doesn't
absolutely
do a
no
bunch of
chance in hell
equities,
of
right? It's
staying,
only very
anywhere
liquid
near
indexes like the
230 or
S&P,
240, then just
but
shut the
you
whole
can
thing down
test.
and move on,
Oh man, you can
right?
test so many
That'd be
things, and you can
the
black
goal.
out dates
And if I
on your
zoom in here,
back testing, so you can like
sometimes we got to use
block
the
all the
Y scale.
FOMCs, all the CPI days,
Come
anything
on,
like that.
quit being
You
a
can block them out.
It's a fantastic
Grumpy
back
thing.
testing tool. It's not cheap though, but I love it.
We don't
And
start
I have
going into
nerded out
loss.
in here
Let's keep it
a
at like
lot,
above $1 at
figuring out
least.
different
Until Apple
mechanical
gets down
options trades that we
to
can put on. It
$201.
doesn't
So as
require,
long as Apple's share price
technical
stays
analysis
above
to do them.
basically 201, then we'll have some form of profit in this trade closed
on October 17th or before, right?
That's
If you look
our
on the bullish
risk
bears
to the
website,
downside.
I'm pretty sure we've got an affiliate
with a line in
code
the
too.
sand at 201.
That's not bad, right? Hold on, let me see. I got a question here. $50% off. Well, that didn't do me any good. Here's this page. That'll allow you to click on it. And it even does intraday down to 1 minute. Like I said, these guys are the best back testing company I've ever come across. Really granular details on the qualifications and the settings and everything that you can do. Really hone it in. We did a video on it, like a webinar. We invited them in, they talked, and then I've done some live streams where I've used that product live, and we were back testing like butterfly strategies and iron condors and that sort of stuff. It's easy to fall down the rabbit hole with that thing, man. Like we got into the dark with that one. Almost there. See, I ain't that old. Oh, and I do have somebody cataloging the replays, at least my replays. They're not cataloging everybody's replays. So as they get those done, the replays will get the descriptions added to them so that when you scroll back through the replays, my videos at least will have descriptions of what the replay was that day. Ain't gonna happen overnight, right? Because there's 2 years of videos in there. But at least it's in the works.
All right.
So that's not a bad trade for Apple on the idea that all we got to do is stay above 201. We got today's levels, right? The day is done.
For the rest
You
of
would
it,
mark out today's high, today's low,
into place,
the
all out of whack.
close, and the open. For the upside, push that into tomorrow's price
to look at where we open
assumes
tomorrow.
the resistance
and
is
then
in the
use
way,
those
and
levels
likely
for the
holds
next
us
day's
back.
trading.
Right now, I'm kind of counting on that. Really, 256. It's right up in this ballpark up here, and I figure we would get to the gap close.
We didn't get around to it.
Something like that.
We're gonna check it
on
Friday
and see if it's still
and we
a
got
viable
options
play.
but
Or we got earnings still between
Baba,
I like
this.
December and all of that stream, and then we'll check it on Friday. This is a tentative schedule, but it's October 30. So we're gonna want to deal with this. This is a broken wing butterfly, and when I would go to mid October and run their options boot camp, we got this was always the trade that I brought. The gap to fill, previous high trade here, and using both of those will kind of work in our favor. There is another gap in there too. I think might slow it down too.
Not
we
new
want
option
it
traders
slowed down a little bit, right? We don't want to get run
trading
right the
options
hell over.
understand this
And
logic.
these things would
A
work in our
typical
favor.
butterfly goes
So
like
the
that.
downside's covered all the way down
This
to
one
$200, which I think
all
is
the risk
more than enough
off
of one side. So all this risk
and
that
the
would have been
upside
down
is
here,
covered
because
and
we're
we'd
likely
set
to
it
hit
over here.
resistance along these zones or
So
levels.
now all the
and
risk
that
is
would
only
slow
on
it down
one
before
side of
that
the market,
October
that side.
expiration. And
hits
if
us.
we go up, we can just go up and up and up and up and up.
In
And
this
trade, if we
however
do
much
kind of
credit
stall out around
in the trade,
250,
that's how much we
area,
get, no matter
the
how
sweet
high it
spot
runs.
be like right at
And I like
250.
that. Right?
Then we
That
got
means
400 and
your
something
butterfly
dollars.
can only lose
So
one.
I mean, what am I risking? $7 for
The
$400?
bad side is
that the butterfly
I
has a
like
bigger
that.
loss
And
on
it's
the
a
downside than it normally
diagonal.
would
So
have.
each
I
leg
still
is
have downside.
individual. But
Just like with that
unless you just
XLF
sit there
trade,
and
at
like
any
get
time
punched in the
we
face
can roll the short
and
call
duck,
closer
you
to
know
the
what I mean?
long
And like
call,
you see someone
right? And
trying to
turn it
assault
into
you,
like a
you
call debit
adjust.
spread or a call credit
So if
spread.
this
We
did
can
try to
remove a
break
lot of
down,
the risk, lock
it
in
has a
gains,
September
all
19
kinds of things,
expiration. We
right?
would
All
adjust the
kinds of
trade.
things that we can do.
We've got choices,
And
since
we'd
we've
have
got
plenty of
4
time to do it.
strikes to
So
work
I
with
like this
and
trade.
3 legs.
It does
So
require
we
a
can
little bit of
kick one
capital,
off, push
right?
one up, push one
$7
down,
doesn't sound
add
like much,
options,
but
do all
you
sorts
still
of
have to
things.
be able to
The
cover
reason
all
we
of
call
this
it
risk. The
broken leg
broker's going to want $1,500
is
for
because
you to put
one
that trade on,
whip is $5
and
wide,
that makes sense.
the
But we're
other
never going to
whip
take that
is
kind of loss,
$10 wide.
right? I
We're
don't
not taking
care if
typical
the
butterflies
world
would
blows
go,
up. We're
5
still
one
not
way,
taking
5 the other.
$1,500 in this trade. No,
10 one way, 10 the other.
I will not
This
take
is
that
not
sort of
doing that, right?
assault. So that's why it's a
So I
broken
liked it.
wing butterfly.
You could try different expirations or different strikes if you like. I'm bullish Apple in the
I
big
like
picture.
this for
It is a
Baba
bit
on the
extended right
expectation
now,
that
so
this
it's a bit
breakout
ahead
was
of
going
its
to
skis.
stick
Had really
and that
nice
it
breakout
could
volume,
just keep
not
on
earnings
running.
either, right?
But my
It ran up and
theory
broke
was
out
we
on
would break
breakout
out
volume,
and then we would
and
stall
then now
around
it's
that
kind of faded off a bit,
130
but that's okay.
level.
We don't need the
And
volume
if
to
we
be there
do
the whole
stall out
time.
around
We just
130,
want to see
that's the
breakout
midpoint
volume on
of
this
this breakout day,
butterfly, right?
and
And
we
it's where
got
we can
that.
make the most amount
Left
of
some
money.
gaps behind. That's
If
always
we
a little bit of a
overshoot, that's
concern.
fine. You know what I mean? We overshoot, then
We'll still
and
make
if we
money.
put it on the
But
weekly,
if we land on the sweet
plenty
spot,
of room left.
then this
We
thing will
had
really
that
move up.
wedge that we came out of.
The goal or the
Really
plan was
beautiful.
we come up,
And then,
we
of course, we
reject
rolled
across
back
150,
for earnings,
we
and now
fade
we're
back
continuing
into
on with the
September.
breakout. And then, September's expiration, we're sitting around the 130.
Kind of
We
want to
banked.
see it stay above this 250, 225, but I'm flexible at this point.
One of my concerns was the halfback on this whole thing, and that's 215-ish. It's where we were hitting our head here all these times. That's the
Yeah.
breakout that really
Yeah.
matters, I guess. It's a typical butterfly. So just go in here,
So I like this one.
options chain, and look for
It's not
September
asking for
19th.
much, right?
We
In the
go to the
grand scheme of
130,
things, just
and
keep moving to the
we can
upside.
go unbalanced, which is not
And
the
if
right
we don't,
word. I mean, the tent is
yeah,
really
that's not
wide.
even the right trade.
It has a
Hold
bigger
up.
slope than it looks like
Thinkorswim,
it
I
does
believe,
to the
has it in there.
downside. So, we are right here.
Now
Right
all
now,
they got is
that's
the
where we're at.
unbalanced.
233
Unbalanced is like a
ish,
ratio
basically.
fly. That's not what we
So
want.
the trade
So
is
we'll just
fine.
do
And as
butterfly,
long
then
as we
I'll
stay
change the
above
legs.
whatever I said,
Put it into
201
the
or whatever,
analyzer,
then
we're still good.
which I already have. And we can see that
And
that's
30,
300, that's
35, and then
$33 to the
30.20.
downside. I don't think Apple's gonna,
If it was a
go
regular
crashing and burning
butterfly,
down there.
it would look like that.
And if it did, I mean that's when we
But
would start
we
to lose our $7.
push
$7.
one of the legs
You
off
know what I mean? You can't
to
get
make it
cocky
higher,
nowadays for $7.
and now we get a
It's
credit.
fine. When I
So
built
that
it in
leads
the
us to
pre-market, it
Baba.
was trading
Baba,
for
big old
$2.50.
breakout
Now it's
on
trading for
Baba.
120 or 170.
It does
And
have a
that's
little bit
not
of
bad,
elevated
but
volume,
it
but
kind of gave
I
up a
gotta
little
say,
bit of its
I'm
gains
a little
already.
disappointed
This
still,
late in the day
that
to
would
see
be our
that
credit.
little volume.
If it overrun
And it just kept going up.
Investors Business
We
Daily,
could
they
just
talk
keep
about
the
breakout
170 in
volume.
credit.
If it hits
And
the sweet
I was
spot,
listening to him in a
then
video
we can
once, and
get
it was a new guy that was
a
asking
lot more
questions, and
credit.
he's like, "So what kind of
It
volume?"
maxes
And
out
the
at
guy's like,
big volume.
"Call it
And
665."
the new guy's like,
"Well, yeah,
we
but
would
can you like
never
put a
expect
number on it?
max,
Like, what?
right?
How much volume? 100,000,
Always
200,000?"
shaved like
And of course,
15%
we
off of
can't
max.
answer that, right? Because
But
every
one of the
single stock
legs
has
is
a
in the
different
money.
volume,
Yeah, or maybe
level.
even two.
And so
At
the dude's
this
like,
point.
"No, we can't really put a number on it unless you want to use
When I
percentages."
built it,
It was pre-market, right?
the answer
So
is you want
we weren't
you
at
want
that level.
volume that's so big. When you
We
bring
were
up
like
the chart,
down
you're just
here
like,
somewhere when I built
damn, look at that volume, right? Like a wow volume is what they called it on.
because I was just
Investors Business
evaluating
Daily. And I
on
like
the
that answer.
breakout what it
If
would look
you're
like for the
a
day.
trader who's focused on breakout volume,
I had no
you want
intentions
the
of actually
volume to be
putting
so
that
big that
particular
when you
trade
bring
on
it up, you're
the
like,
way it was. I
wow,
just wanted to
that's a
know,
big
was there any
volume.
value there at
Right?
all?
That's the kind
I
of
took a
volume.
picture of it. I threw it in
Kind
the
of like
chat
back here
this
it
morning
wasn't
to get
earnings,
people
big
aware of the
volume. That's some
setup.
old dang volume.
And then if we had
This is
time,
really
we were
big
going to
volume, but
focus
it's
on
earnings volume, and that don't
what
count.
we
right?
were what we were actually going
So,
to
anyways,
trade. Baba's had this line in the sand forever at
but trading
120.
in
It
the
has
money is
been
not
an
here,
issue since
right?
all the
Like
way back
I
here,
know it's
right?
all over the internet.
So
Like it's the
120,
worst thing
120,
you could ever
120. It's
do,
been
but
Baba's,
that's not
true.
Just it's critical juncture that it has struggled to get
So
through
I still like the
forever
trade
and ever
as a broken wing
and
butterfly.
we
I
are
want
trying yet
upside
again
to
get
be
above
safe
120. There it
with
is, right? That
some
that level
downside
right there,
pain.
120.
We just got to adjust
It has done
and
it before,
find the
back
level
before COVID and all that.
of comfort that we want.
But since the tumble through the rest of the market's run, we were angry against China, right? If you guys remember, they were, quote, uninvestable, was the phrase that was used on like Bloomberg, JP Morgan, Goldman Sachs, sending out letters telling everybody don't trade China. And so everybody just dumped them through 2021 and into the bear market of 2022. Everybody was just hating on China stocks. So it got beat down like everything else, and then it built this base, and I'm on a monthly chart. This base has been building for a long time, and now they're trying to take a run at that 120 level.
You know,
now
all
that's a
things
buzz
considered.
right? The thing is, it
Not
just
the
overshot, so it's
most
a ugly
glamorous
Busby.
looking.
And then we
markets
started
right now.
getting these lower highs, and those aren't cool. If you're trying to trade long, you don't want lower highs.
Oh yeah, I mean butterflies.
So we
are
had
awesome.
some issues with
They
that.
are so
But
versatile
we're getting this
when it
breakout
comes
again.
to the
right?
ways
So
that we
I was
can
looking
apply
at the
'em.
breakout today,
And
and
sure,
it's
I
on
mean, we
news.
could build
And if
the
you've
whole
ever
thing
done
out of
any
the money,
research into Baba
but
and Baidu, those
those
guys are
our safety net,
they're like
so to speak,
our chip
comes
guys, right?
from
They're like the Mag 7 of the China space,
where we have it
they're
built.
really
you know.
important, really big companies. So they're getting the
Using
breakout
puts to
and
go
the
long
push,
is preferred.
and I thought, well, why not? Why not focus on this one? Probably could get a good trade. You see this inverse head and shoulders in there, maybe, right? It's there's the left, there's the head, and here's the right. Well, if that is an inverse head and shoulders, then we can measure from the shoulder to the head, and we can
Oh yeah,
project that whole thing
direction's fine,
to the upside,
right?
and it gets
Like
us above that point if we did that.
there's
right?
nothing
If we
wrong
make
with
that
trying
measurement.
to target.
So
an
that's the
upside
base
move
case bear
or a
argument on
downside
where we're
move.
going to at least that point,
But a lot
at the bare minimum.
times,
We'll get there, and
if
then
I'm
we'll
sharing
figure it
the
out,
trade
wash
in
it up.
chat,
I want something that people can get into on their lunch hour or near the end of the day. Even catch me a day later, and is this still good? Yeah, you can still put it on. And directional plays.
So
a
let
lot
me
of
show you
times,
the
I got a
picture
couple.
that I
I posted
tried
it in the
price where
chat
they're
this
just
morning,
bad.
but I
And
mean, why tell you guys to go
people
scroll
can't
for it when I can just grab it and just
post it.
show up? They got day jobs, and this is a
Kids and
broken wing
things to get right.
butterfly, which is different than a ratio fly.
So these
Right, ratio fly, we
alternate
would add
trades
more legs and
or
strikes,
alternate trade approaches.
still
Hey
give them a
Marzini, you
chance
have a good one,
without
buddy.
having missed
Sorry, I just
the
caught
move.
that.
He's gone. He didn't hear me. I'm talking to myself. So that's the broken wing
Just
butterfly.
be mindful of
And
the strike.
this, I
Right?
took a
Like
zoomed in shot.
it's
of
really easy
what
to
it was
get it
pricing in
confused.
the pre-market.
If
I have
I
not
move the
priced
wrong
this
one the wrong
once
way,
the market opened. I got busy.
let's put it to a
So
regular butterfly.
we can go in
There's
and
your regular
reprice it and see what
everyday
it's actually
butterfly.
trading
And I'm
for.
gonna
And I'm going to hide that P&L a little better. I'm going to make it darker to where it's just the one showing. There we go. So that's what a regular butterfly looks like. SPX plays.
And if I kick the wrong
All right,
one,
let's set Bubba
the wrong
aside
direction.
for a moment. So let's move this to 40 and talk about the SPX here. Now the downside is protected. If we can fall,
So
and
there
fall
are
and fall,
some
and I won't
generic
get hurt.
trading
But if we run
concepts
too far to
that
the
really
upside,
help
I'm going to get challenged really
understand
bad. This
if you're
is
gonna
a day
bad
trade in the index.
when you
Whether
see
it's
price running into
SPX,
resistance.
NDX,
This is a really good
the
trade for
ETFs,
resistance
SPY,
plays.
QQQ.
Because
And that
if
is
it
that
breaks
these
resistance
things
and
are
overshoots
before falling back in. They're
that can land you in the
self-reinforcing,
10, the sweet
and
spot.
they
The
gravitate
problem is if it
through
breaks
a
resistance
linear
and it
range.
just runs to the
right?
moon,
So
you're gonna
unlike
get
equities,
hit, right?
that
Then you
can
have
break
to
out and
roll
run
the
to the
trade or
freaking moon.
adjust it or do something
Index
else.
ETFs do not
But
do that.
these are
Same
really
with the
good
index
for that.
sectors, right? So
Um,
XLF, XLK,
The
XLY.
other way,
They
though,
always
if you think
mean
we're going to
revert
continue to move
just
in the
you know,
breakout direction,
is
dig
taking it
into
to the other
that,
side. They
run it that way.
always, and of course, mean
I
revert.
did all that from puts, but if we flipped it around, right, and we bring in the call side,
So if we have a really hard day
same thing
in
the
one
other
direction, expect for that to stop, and we're going to go in the other direction within a
I
day or
can
two.
see that. One of the defenses
This
to
is
this
a very
is
simple
to
concept,
add
but
another
it's a very
strike,
true
right?
concept.
Another
right?
another
They
vertical.
always mean revert,
And a
So
lot of
now
times they do
it's
it
a
in the same day.
1-3-2,
So we'll get like
a
a big down
ratioed
move on the day,
butterfly,
and then we'll
instead
just
of a
run back
regular
up on the same
butterfly.
day, right? Maybe we don't get back to, you know, the high of the
And
day,
with
but
this one,
we'll
we
at
can
least
actually
try.
put it back to the typical
There are
butterfly
exceptions to the
with
rule. If we're in a bear
$5
market
wide
and
on each
every
side,
day's negative,
it's a
then we'll just
1-3-2.
every day negative. There's
The
my
thing is, if you
upside,
did go out to a
and
daily
there's my
chart and
downside.
you looked at a bear market, say 2022 was the last
The problem
bear
with this
market
one
that we had,
is
last
it
official
tightened up
bear
our
market.
downside.
Even in that bear market
I
environment,
believe
we
didn't just fall down every day,
and
right?
we had
Depth is a little
days
bigger I
of
believe.
down, sure, but
But then we had days of
much
up. And
wider on
as I zoom
Apex.
in, what you'll notice is
So
what they'll do in the
net that
pre-market
we're swinging
is
around
we'll
to
gap
catch
up.
bugs,
It's bigger.
I
And
think.
then we'll get into the regular trading session and we'll trade through that gap
So
up,
this
and
is
we'll
just a lot more
close lower on the
contracts,
day than
but
we
it
did
keeps
yesterday.
everything
That's a red day.
equidistant.
And then we do it again,
And
and we do it again, and we do it again.
you have
Because if
a
you
call
just go
vertical
red
in
day,
there
red
that you
day,
can
red day,
take off
close,
and
close,
still
close,
leave the
close, lower,
butterfly
lower,
on,
lower. You
which
just
is
scare
really nice.
everybody and freak the whole market out, and it crashes and burns, right? Like these days. Look at the no wick, closed at the low, big gap down, no
That's
wick,
also how
closed
you
at the
can
low.
fix it
That
if you're
scares
losing,
people,
right?
right? That freaks them out. So that's not typical. That's not
They
normal. What we generally get is things
if
that
we
look more
add
like
the
this with that wick,
130,
right? So I'm going to zoom into that
125,
because I think that's a really great example. And remember, this is the SPX, so it
and we
doesn't even
add
have the overnight part of the
the
discussion.
130,
But it closed there, it
135.
gapped up to open here, ran up,
Bear with me.
and then closed lower, right? So got to have a kind of a feel for what does price do on a day-to-day basis. It's the indexes.
All
This
right,
isn't
there's
Apple
the
and
original
Microsoft and those guys.
broken wing butterfly.
If you're wanting to focus on price action,
If
don't
we
waste your
take
time with
some
those
sort of
guys.
heat
Focus on
or
these guys
some pain,
because it is different.
see how we broke that down?
From that, there's the expectation of how
break it
far does
down,
price
look
move
at
on
this side.
any given day. Well, every market has its
We
own
reduced that 300 down to
rhythm,
100.
right?
We put
If you
loss
are
back
a
on the
car guy
upside. So
or gal,
if price
and
starts to
you
fall really hard and it's headed to the
start your
downside,
mower,
you're like, oh,
it has a
shoot,
certain
man, that
idle to it.
it
It's
hits
different than your
resistance
car,
and it's crashing
right?
and
Your
burning down
four-wheeler
pretty
has a
hard.
different idle. Your motorcycle has a
Then
different idle.
we could just add.
And you'll
a
notice if
vertical,
the idle is
and it
off,
limits
it's
that
missing,
downside.
sputtering,
Guys,
it's not
I gotta
acting right.
go.
You
I'll be
also
right back.
notice when
I
you
will be
give it
back. Just hold
the
on.
gas, you throttle up on that thing, and it responds. It's got a nice rhythm to it. Markets are exactly the same way. They generally have a rhythm to it. And every market, although I can't show this in a bubble, every market has a bubble around it. See, there we go, like that. Now, of course, this is an exaggeration, but on any given day, at the start of the day, if we were to put a bubble around price, that would be its range for the day to the high side and the downside. And we could expect that to follow price as it moved all day long. The thing is, no charting platform offers that bubble. You know what I mean? Like it just doesn't exist. But we have channels, and channels are like a bubble that didn't close. So within those channels, you could use Bollinger Bands, acceleration bands, VWAP bands, Keltner bands, whatever. Put a band on it. That band is your representation of how far price could move on that time frame. And then if we exceed that, you know that we're going beyond the average move of that.
I'm going to end the live stream for the YouTube.
The thing is, on a daily,
and
we can run the numbers and we can figure out what a market's actual average daily.
If you guys don't have any questions,
rather than
we'll
using
wrap
the
it up
bands,
here too.
the ADR.